introduction. My name is Zombo Moriuki. I'm a social media manager, digital market and content creator. And once again, I'm with Samson from Huru Finance, and I want us to talk about digital tax.
Thank you. It's nice to be here again. So digital service tax was introduced in Kenya. It should take effect this year, 2021 in January. And ideally what digital service tax is all about, it's about tax for using the digital platforms and transacting on the digital space. So let's say that the likes of Jumia, for that example, or Kilimall, or Sky Garden, these sites that provide platforms for people, for businesses to meet their clients. So these platforms are charged, not the person who is selling there. So these businesses are charged 1.5% of the commission they earn from these sellers. And that is one perspective of the digital service tax. Another one is whereby I do services online, I do offer services online. Yes, so it's not about goods. I think there has been this notion of people saying that oh, I'm selling some things on Facebook, on Instagram, on any site, so I'm supposed to pay digital tax. The answer is no. It is digital service tax. The name suggests it's for services, not for goods. So it is this. If you're selling shoes, you're selling clothes, selling all those things online. As long as it's not services, it's goods. You're not liable to taxation. And the only people who are supposed to pay, like I said earlier, is for services. People who provide a platform. So like an online platform for people to interact, for sellers and buyers to interact. This person is being taxed for the money they earn from the seller. They give them. That is now for digital service tax. So it's not anything close to if you're selling goods online, supposed to pay. No, that's not the case. Yeah.
So for anyone who had the misconception, there you have it. Because when you follow the conversation online, it's a lot. Like people are like, what is it now? Am I being taxed? Me as a content creator, as a YouTuber, basically if I'm doing anything online, so guys are like, as a content creator as well, like I'll be taxed, for this creating content online. So there is explanation, or not. Now speaking of selling online, as a sole proprietor who's selling online, how am I supposed to file my taxes?
In the earlier episode, I think we talked about debts of taxes and also talked about the mistakes that people make in taxes. So as a sole proprietor, you're supposed to just do your normal taxes that you registered with your PIN for the business. So if your PIN for the business is just basically only income tax, all you'll be doing is minimum tax. Rather, you'll be filing the income tax at the end of the year based on the performance of your business. And also, there's this minimum tax of 1%. Whether your business is making losses or profit. So you're supposed to remit 1% of your sales. 1% of your sales to the government. So at the end of the year, this will be regarded as an advance tax. So at the end of the year, when you're doing your income tax, what will happen is when your amount of tax that is supposed to be paid to the government is higher than the monies you have been contributing as minimum tax throughout the year. So once the income tax at the end of the day is higher, so the difference between the income tax and the minimum tax that you've been contributing, that difference is what you shall pay. But in the instance whereby the amount of tax, minimum tax that you've contributed is more than the tax supposed to pay the government at the end of the year, then you will not pay the government. But instead you'll have you'll be in a refund position. So you use that for the following subsequent years to claim your taxes. That is for that. Another thing would be VAT. So ensure that you file your VAT. And VAT, you can register for VAT in two ways. The first way, as a business, is when it will be voluntary. Let's say your suppliers want you to have vertical goods. Because if I'm purchasing things, I would want them to have VAT. Because for me, an expense VAT reduces my expense overall in filing VAT when I have sales that have VAT. So that can be a voluntary way of having VAT when you want to just have VAT obligation. Another one is the requirement. Maybe it's not voluntary. This one is, if you meet this threshold, you're supposed to have VAT, which is 5 million turnover in a year. that is your sales amount to at least 5 million in a year, then you're supposed to have VAT in your PIN. You're supposed to add VAT tax obligation. So in those instances, then you'll file VAT, and VAT is filed on a monthly basis, which is 20th of the following month. So it is the net effect of the tax of your sales less the tax of your expenses. So if at some point that figure is positive, that means you have more sales taxes than purchases tax. That difference of the tax amount, not the value of the goods, the tax amount. So if the goods, you sold goods worth 100 and the tax is 16, that means you'll sell it at 16. So the sales tax is 16, and if you bought a good, let's say at 50 shillings, at 16%, the tax is 8 shillings. So you will end up saying 16 minus 8, that is 8 shillings you remit the government as VAT. However, if the other way around now, let's say your purchases are more than your sales, in that case now you suppose now you'll be in a position whereby you'll be in a, not in a refund position, but in a payable position. Sorry, I think I have a mistake, but rather when your expenses are more than your sales, that position now you're supposed to claim from KRA. So you'll have a negative balance, and in this case you can use it for subsequent months filing VAT. You can claim it the following month. If you the following month, now you are at a positive position. Yes.
And then what happens if you don't make sale for a period of time, each a month?
So if you're not doing anything, either sales, not purchases, you can just file nil returns for VAT.
Okay.
Yes, but don't fail to file return. As we said in the previous episode, that one mistake people do is fail to file their tax returns. As long as you have a tax obligation in your PIN, you can see in your PIN you'll have down there the tax obligation and the effective date of each tax obligation. So if you've got VAT in your PIN, you're supposed to file by 20th of every month. By not necessarily on that day, but before the date. The window is open from 1st to 20th for you to file returns on that time. Yes.
Okay. And finishing off, for anyone who might be wondering, is there a place you can train or on how to file taxes? Is there school for it, or how do I go about being a prowess in taxing?
Taxing. It's knowledge that is gained over time. That I can say. So the first thing is KRA website offers a platform where you can have, if you have any query regarding taxes, they have a Q&A place, so all FAQs that will ask questions that can be answered on the website. And also, they have a place that you can subscribe to an email that from KRA sends to people. So that particular moment, you can decide that, so let me subscribe and I'll be updating you on any new changes that happen to tax. Because the legislation that passed every now and then to the government, that will affect the taxes.